Welcome to Legacy Money, the show to help you live more, give more, and leave more. I'm Barry Page, your host, and I'm joined today by my good friend and colleague, Jon Webster. Jon, how are you doing today?
Doing great.
So we're just going to have a fireside chat today. And I know some of you are just listening. Some of you may be watching, but we're going to keep it real simple. We're just going to talk. And I do remind you that you might want to watch it over. You might want to check out some of our other videos. And if you haven't subscribed already, then please do so. But in today's program, we're going to talk about our favorite subject, the infinite banking concept. But our goal today is really just to get you to think. That's what we want to do. That's the purpose, is to get you just to think about what's really going on out there. And it reminds me of an old adage or quote that I just heard again recently. It says 5% of the people think, 10% of the people think they think, and the other 85% would rather die than think. Now that's accredited to Thomas Edison. So I'm not sure if he's the one that actually said it. I heard it a little differently originally, but when I looked it up, they accredited it to him. So many people, that's a sad statement, Jon, that they'd rather die than think. Yeah. So let's get started. Now, I have, if we've learned anything, I'd say over the last couple years, is that it's really just about control. And I know many of you might think it's just about money, and there's certainly a lot of people that have profited from this whole pandemic thing that we're going through. But ultimately, there's people in power, these elites, that really, they just want more control of our entire lives. So, and I know many of you out there may be feeling just tired and beat down. I know I have been over the last year or so. And it's, we're living definitely in a different time. But for the most part, and I know some people think that there's nothing that maybe they can do on a personal level. Voting doesn't seem to help. But for the most part, that might be true, in the big scheme and the government policies. We can't control those, but what we can do is control our own lives, our own personal economies. And that's why I think Nelson Nash said, learning to control it is the most profitable thing you can do over a lifetime. Now think about that. He said profitable thing. It's something that we can do ourselves. We can control our economies, our money supply, and we can profit from this. So that's what we're going to talk about. And, I know a lot of times we bring up some of the other things that are going on, and I don't need to tell you about all the bad news going on in the economy. About inflation, about the uncertainty out there. About the onerous taxation that's here and is yet to come. But you hear enough about that. So I want to focus again on just getting us to think and what we can do to control our personal economies. And if we do this, we can protect ourselves from these outside forces, and we can profit when things, if they do, come crashing down. And, if you know much about IBC already, or if you're just learning about it today, even IBC, the infinite banking concept, you probably may know, or I'm about to tell you, that we use good old-fashioned dividend-paying whole life insurance as the financial tool. So life insurance is a financial tool, and that's what we hope to kind of express to you today, how you can use it. It's why Rebecca Walser, a tax attorney, called it the golden child of the U.S. tax code. It's the only asset that we can have both income tax-free, estate tax-free, and access to over our lifetime. Ed Slott, IRA expert, said life insurance is the single biggest benefit in the tax code. So right off the bat, you should know that it's got some pretty good tax advantages. But there's many other things that's going on here, and we've been taught that we should be diversified, and unfortunately, that means for most people a mutual fund that's in a tax qualified account, a government plan, and maybe they have a little savings in the local bank. And if the average family has those things, which most of us do, then they're exposed to onerous taxation and bank rules right off the bat. So government control and bank rules. And when I talk to people specifically about this in their own personal economies, most everyone tells me that that's not what they want, but yet people continue to do it. And then, once I explain to them about the tax rules and the advantages, some people say, well, what if tax laws change? Well, tax laws will change, and they do change. They have changed just about every year since the IRS was created in 1913. And then other people say, well, what if the economy crashes? What if the dollar crashes? Well, if it does, it does. So would you rather have access to capital if that happens? Would you rather have capital available that you could use in that situation, or would you not? By the way, these things are already happening. They're happening right before our eyes. And so we just want you to be able to take advantage of some things that you can do now while you're healthy, while you have time, and just, be prepared for some opportunities that are probably going to be coming our ways, and be prepared to profit. Now, I'm just going to kind of start off by saying, what our parents did, if that's where you learned about money, or even what, the entertainers tell us on the TV and the radio. Times have changed, and our money, how we utilize our money, has changed. And so if you just look at something, many of you might be familiar with the term three-legged stool. So when our parents and our grandparents were alive, and many of your parents might still be alive and your grandparents, but my grandparents and my parents are pretty much gone. My mother is still here. But they depended on something called the three-legged stool. And this was typically a pension. It was the savings that most people had in the bank, and it was Social Security. So that's what they would depend on during retirement. Nowadays, these things have been replaced by a 401k, which instead of being a defined benefit is a defined contribution. Most of you are familiar with that. Most people have little to no savings. And what most people don't realize is that their Social Security now will be taxed in most situations. The only way it won't be taxed is if that's your only income in most cases. So, John, what are your thoughts on those things?
Well, first off, I like that people need to change their thinking, and for many, that just means they need to think.
Right.
But we've got to think differently than we have in the past to deal with our finances, because our thinking is what got us to exactly where we were at. Right now.
Yeah, absolutely.
And so we've gone through some turbulent economic times in the past, right? We've seen the economy go up, we've seen the economy go down, but we need to think differently than we did in the past. Otherwise, we're going to end up with the same results that we had, right?
Yeah.
And we've watched economic crashes, and we've watched the economy rise back up and run. And I call it flat forehead syndrome, where people look back at the last 10 years since the crash in 2008, 2009, 2010, and they look now and they go, if I would have bought that property at the edge of town, if I would have bought those houses that I had an opportunity to buy when the market crashed, where we would be right now.
Right.
That's what I call flat forehead syndrome. And so changing the way we think, because the market has risen, is rising, but there will be another crash. And we're entering into a time that we can look at history and see a lot in reference and retrospect, we're entering into a time quite possibly like the 1980s. Right now, just today, the news story came out that inflation hit 7%, and that's the highest inflation rate. It actually broke the inflation rate of the 1982 record.
And ironically, 82, the year I graduated high school, inflation was off the hook coming out of the Jimmy Carter years and going into Reagan there. So yeah, interesting.
And so if we're potentially entering into an economic time like the 1980s, it was very turbulent. There was inflation that went rampant. Then the interest rates went up because the Fed Reserve was trying to correct the inflation. And you know what happened? They raised the interest rates all the way to mortgage rates were 15, 18% to get a mortgage. And so what did that do? It caused the real estate market to implode and crash. Now, there were some that had thought about storing up a little bit of money. And Nelson always says, when you've got access to capital, opportunities will arise, right? Opportunities will abound.
Yes.
And so what happened is I know people personally who started buying real estate in 1980s. In the crash, interest rates at 15 and 18%, and they were buying real estate for pennies, right?
Yep.
And some of those people built up investment portfolios where they have 1,500 rental doors today, right?
Yep.
Off of just taking advantage of turbulent economic times. So what do we do to weather the storm? What do we do to prepare right now to take advantage of opportunities as they come, as we see, like Dr. Robert Murphy and Carlos Lara talk about weathering the economic storm, right?
Yes.
And so what do we do? IBC is the best storage vehicle, best to weather the coming storms, the best place to park capital, to have accessibility to use capital to take advantage of opportunities as they arise. We're going to watch some really creative, crazy things with monetary policy. Keynesian monetary policy says that they're going to try to print their way out of this mess, right? We've watched it over the last 2 years. They've printed money like it's going out of style. And when you print more money, it's like splitting shares of stock. It devalues every share of stock, right?
Yep.
And if you devalue every share of stock, or if you devalue every dollar, it becomes worth less, right? If you do it enough, it becomes worthless. But those who have access to capital reserves, some of it's going to be held in IBC, cash values, access to dollar value. That IBC policy could be leveraged to potentially go into precious metals. Precious metals are a stable source of holding, right? Silver, gold. In Texas, Arizona, we have more than just two precious metals. Precious metals may consist of silver, gold, lead, brass, black steel. Those are some very important and precious commodities. But holding other values as well. Real estate. Holding real estate can be a store of commodity value, precious value. But it all starts with keeping what you set aside. When they had runs on the banks because of inflation, because of bank failures in the 80s, people got pretty scared about where their money was at, right?
Right.
So who can you trust to hold your money? We use companies that have been around for 130 to 150 years to hold our money and protect it. Companies that have paid positive guaranteed returns and non-guaranteed returns every year consecutively for 100 plus consecutive years. That's stability, control, protection.
Yeah.
That's how you weather the storm to take advantage of opportunity.
That's awesome. That's awesome. So basically, IBC puts you in control of your money over your lifetime. And again, that's what we just want you to think about, because with a government plan, you have no control. If you have an IRA, a 401k, a SEP, 403b, the like, you have no control. You have no control over the taxes. You've postponed paying the taxes. You have no control over the markets. Most likely, it's vested in the market in a mutual fund, and you have no control over that. You could lose it all. So while we're not saying you don't want to have one of these plans, just be aware of what's going on. And 9 times out of 10, recently I just did another video on where these funds are invested. 9 times out of 10, they're in companies that you probably wouldn't invest in if you knew. Companies like Microsoft, Verizon, companies that you might not want to, Amazon, that you might not, if from a ethical standpoint, moral standpoint, you might not want to put your money there. But unfortunately, they are. And what happens if the markets do crash, right? I mean, we're at record highs now. Many say we're in a bubble. Many say that the market could come tumbling down any day. Now, if you're young, maybe you do have time for it to come back. If you're older, you probably don't. Just remember that even if you are young, or if you're in your 40s or 50s, that the Japanese market still hasn't come back. The Nikkei, the European market still hasn't come back. 20, 30 years, those markets have been down. So what happens? What happens if you lose 20, 30, 40, 50% or more in the market? Personally, I have lost every penny at one time that I had in the market, all at once, everything. But I got 1 penny back. I didn't even, never even cash the check on MCI WorldCom and on lots of it. I lost it all. So, there could be a market crash. John talked about inflation and what it does to our dollar. So we have to keep our money moving, and that's what he's talking about. Just because you have an IBC policy doesn't mean that that's the end of it. You can use the money. That's the whole point. You utilize the money when there's opportunities to buy things that may go up in value or may provide you with income in the future. Maybe you want to, have some money stored in gold. You could do that. Run it through your system, your IBC policy first. Now, so anything else you want to say about that, John?
No, I just encourage you to do what Barry said at first and start thinking, start educating, start learning, become passionate about changing the way you think.
Absolutely. So I want to share something with you too. I'm not sharing this I meant to do this a little earlier, but when you're researching it, because I know if you're hearing about IBC for the first time, or maybe you've known about it for a while, but you're probably going to be looking for a practitioner, somebody like John and I. And if you do, I just want to show you this, how easy this is. You can, can you see that, John?
Yep.
All right. So you can go to the website, infinitebanking.org, and you can use the practitioner finder there. John's in the state of Arizona. I'm in Mississippi. We both do business, though, throughout the country. So you can find a practitioner there. And, if you want to do this, you definitely want to be working, with an IBC practitioner, because I just in the past couple of years, there's dozens of people that are online saying they're doing infinite banking, and they're using, inferior products. They're not trained on how to build the product. So I just encourage you to seek out an IBC practitioner if you want to do this. Now, stop sharing that and kind of get back to the topic at hand. So just again, I want you to think about who's really in control of your money. Is it the banks? Is it the government? Or is it you? So we want to put you in control of your personal economy. Yep. And the real question is, for most people, and I ask this with just about everybody I sit down with, is if what you thought to be true about your money turned out not to be true, when would you want to know? And I think just over the last 2 years, like I said when I started out today, is that something should be, that light bulb should be going off, that the government, the Federal Reserve, the media, I'm not sure if they're on our side. So if what they've taught you to be true isn't working out, if you're still going by the old standard advice, which says, save money, get out of debt, invest for the long term, and diversify, you might want to consider a new plan. Now, I'm not saying some of those things can't work and don't work, but if all that stuff works so well, why are so many people broke today and don't have savings or don't have anything set up for their retirement and their family's future? Mm-hmm. So now that's standard advice. What we're offering you here is specialized knowledge. You're going to have to do a little self-education. You're going to have to maybe rethink your thinking. Learn a different way, because what we're talking to you about is not about getting rich quick. It's not about getting a higher return on your stocks or funds or anything like that. It's about efficiency. It's about recovery. It's about security, and it's about stewardship, right? So those are all things that we should strive for. And again, traditional, standard advice or specialized knowledge. What do you want? So Nelson said, I'm just going to read his quote here. The very first principle that must be understood is that you finance everything that you buy. You either pay interest to someone else or you give up interest you could have earned otherwise. You might remember this, John, because it was at a think tank. They stood up and they said, would you rather earn 5% on the money you're spending or 10% on the money that you're risking or investing, right? And man, it just really started sinking in that, hey, I'm spending money. So every time I spend money, I'm financing something. And so that's what IBC, that's what Nelson, how we boiled it down, was just to say that we finance everything that we buy. And on the topic of diversification, we think we're diversified when we buy a mutual fund, just a bunch of stocks. So if one goes down like it did with me when on MCI WorldCom, we don't get hit. But people found out in 2008, 2009, it didn't really matter. If the market goes down, the market goes down. So you can lose money. But what I don't think people quite grasp is that diversification doesn't just have to be among asset classes. What about tax diversification? Is all of your money tied up in tax qualified plans? Are you gonna pay taxes the rest of your life, right? And that's what, we can probably help you with. So, imagine if you're thinking about infinite banking, just here's a way that, I know people have been relating to Rod Serling, for those of you that remember the Twilight Zone. So imagine, if you will, never having to depend on banks for money. What does that mean? That means no bank qualified, no bank rules. Anytime that you need access to capital and you're getting in, all of these credit card offers and the banker's trying to loan you money, but you still got to qualify. Think about that, never having to depend on them. Imagine having access to capital. John was talking about opportunities earlier, real estate. Maybe you want to buy some Bitcoin. Bitcoin went up, about $5,000 just in a day here because it had been down. It went from like 69 down to 43. And I don't know what it's at today, somewhere in the high 40s probably. But, can you buy it when it's down, right? Can you profit? Now, of course, that's risky. We're not necessarily recommending you do that, but if you did have access to capital when things go on sale. Imagine giving more. If you could give more to your church, to the causes that you believe in, to your family. It's really a good feeling to be able to give money to a cause or someone without any thoughts of ever getting paid back. So giving more and then leaving a legacy that's something that you want to believe in. So that's what IBC can do for you. Jon, what are your thoughts on that?
I love the legacy aspect of storing up my money in a place that passes wealth to my children and passes wealth to my grandchildren. Today I was working on for clients on some policies for their grandkids.
Yeah.
And that legacy that will pass 4 generations. That's pretty exciting, right?
Very, very exciting.
But storing up safety, protection, that does those dollars are doing multiple jobs.
Right.
Have you ever been able to go to work and be earning money from another job at the same time you went to work?
Yes.
Having your dollars do multiple jobs, 3, 4, 5 jobs that those dollars can do for you all at the same time. And that sounds very strange because we don't have an opportunity to earn in multiple jobs. But IBC, when you get an education, you understand you can get your dollars working, doing multiple jobs for you all at the same time.
Awesome. I love it. Your dollars working harder. And, for those of you that may be just hearing about infinite banking for the first time, and you might be asking yourself, why haven't I heard of this before? Well, it's frankly because the big banks, don't want you to know. And, that should be obvious that there's things that the banks and the government are trying to keep from us. Just look at all the people. Jon and I, for instance, have had videos banned on YouTube. So hopefully this one won't be. And but just understand that there's people that don't want you to know. But that doesn't mean that there aren't hundreds of thousands of people out there that are using this very concept and have been using it for centuries. Big corporations, J.C. Penney, Walt Disney was founded with life insurance, McDonald's, the big banks, they all own life insurance. They would never tell you that, but they own more life insurance than anyone. As a matter of fact, the FDIC, which many people think they can depend on with their money in the bank, but the FDIC recommends that the banks own life insurance, BOLI, bank-owned life insurance. So again, they don't want you to know about this, but that's our job to share it. And we just want you to open your mind to a different way of thinking, a way that you can just examine, do your own research, do your own homework. And I don't think you're going to find too many people that have actually held on to a life insurance policy for 10 years or more, the type of policies that we're discussing here, the true dividend paying whole life insurance policy with a mutual life insurance carrier, that will have too much bad to say about it. So speak to people that have actually used it. That's why Nelson wanted to use the name Practitioners, because we practice what we preach. We do this ourselves. We use it in our own lives. So I just recommend that you do a little thinking. And that's really about all I had to share today. Jon, do you have anything else that you wanted to share?
No, I just thanks for being with us here today, joining us at the fireside. I don't need much fire heat down here in Arizona. We're struggling with it, dripping from the sky.
Yeah.
But we're be blessed and dig in and educate. Get passionate about thinking, about doing things different than you've done in the past.
Right.
Leave a legacy.
Absolutely, absolutely. So I know you might have questions. So if you do have any questions about IBC or infinite banking, just leave them below, and we'll be sure to try to answer those in a future show program. And do thank you for joining us today. If you like this video, give us a thumbs up and be sure to subscribe. And we'll see you in the next video. Thanks a lot, John. Talk soon.